Good evening and a very warm welcome to First Issues. Thank you so much for joining us on the program. The Botswana market is one that has been decried for being limited and limiting for businesses, and especially for-profit organizations and companies. With a population of nearly 2.5 million people, the sentiment may actually hold some water for services such as banking. In Botswana, 9 commercial banks compete in this market for customers on a daily basis. This does not include the over 200 microlenders in the country vying for the same customer base. Add on the unpredictability of economic dynamics such as global pandemics, geopolitical tensions, and others, you have quite the environment to operate in. Further to this, the local banking environment is characterized by teething issues emanating from evolving digitization and a drive to move towards full compliance following the newly introduced Data Protection Act. Additionally, the banking industry is observing general liquidity constraints from customers that they're closely monitoring. But in spite of all that, the largest commercial bank in the country, First National Bank of Botswana, have yet again managed to announce record-shattering financials for the 6-month period ended 31 December 2024. The bank announced a 1 billion pula profit before tax compared to 879 million pula for the same period in 2023. They also announced a 37.1% return on equity and a dividend per share of 18 thebe. Simply put, return on equity is a financial metric that is used to assess a company's ability to generate profits out of shareholder investments, while dividends, on the other hand, are a sum of money that is paid out regularly, typically annually, by a company to its shareholders out of its profits. With all that though, the urgent question may be, how has the bank consistently managed to attain success and be triumphant in their growth endeavors? Our unpacking of the financials starts first with the bank's Chief Executive Officer, Stephen Bogatsu. Then later, we talk to the numbers man, Dr. Mbako Mbo. Steve, thank you so much for coming on First Issues and affording us your time. Yet unprecedented results yet again. And this is a period that we're reviewing for 31 December 2024, half-year period. But during that same period, Botswana was forecast to go into a recessionary period. Did this affect business? And if so, what mitigating measures did you take?
Thank you very much, Ponaseho, for giving me this opportunity. So indeed, we know that the macros are not very supportive of the environment, the banking environment in particular. The first impact is actually the fact that most businesses are dependent on government. It means when government starts experiencing these challenges, inevitably other businesses in the country begin to experience the same. Secondly, for the banking community in particular, is that we have had this issue with liquidity that is developing, and the shortage of liquidity as a result of a number of factors, including slow income from diamonds, increased expenditure at government level. All this leads to constraints in liquidity as we are beginning to experience them. So for the banking industry, what that means is for many of the players, if this situation continues, it's going to constrain their ability to give out loans. If the situation continues, it's actually going to increase the cost of funding, and therefore it's going to impact results in the banking industry going into the future.
You are in the market competing for a population of about 2.5 million with 8 or so other commercial banks with just over 200 microlenders. What would you say sets you apart from your competitors?
When we established here, before even thinking of growing balance sheet and all that. We made sure that the fundamentals are in place, that we have a robust system that will allow us to roll out multiple products to our customer base, which is why in the initial stages we had the most diversified balance sheet, where we were offering personal loans, West Bank loans, as well as property finance loans and credit card. So the first thing is our customers have access to a variety of products, which was not the case with others in the industry. Secondly, we focused on ensuring that we provide our customers with ability to do banking 24/7, so customers don't have to come to the bank to access our products and services. They can access it wherever they are. So these are some of the factors that gave rise to what we call VSI, Vertical Sales Index, where our customers enjoy more than just one product from us. Thirdly, there was a lot of focus on ensuring that we are servicing the customers in line with their expectation. So there's been a lot of investment in upskilling, in ensuring that our staff members have the requisite skills to service our customers.
You have shattered yet another record for yourselves. I mean, 1 billion pula in a 6-month period is nothing short of miraculous, if I may, but hard work as well. Are you not afraid, though, that the bank may reach a natural plateau in its performance? And if so, what are you doing to make sure that that does not happen, or if it happens, there are cushions?
The trick to that lies in your own assessment of your competitive landscape, your own assessment as a business of what you are capable of doing and where you are on the sigmoid curve. Depending on your self-assessment of where you are, you put in place measures to ensure that that plateauing that you are talking about is countered by other interventions that ensure that you are constantly on some kind of growth phase. You are constantly introducing new products. If there's saturation of the products that you currently have, you are looking at new markets in instances where the market that you're operating in has actually saturated. So the trick to that lies in continuously rebirthing the organization so that you are always on an upward curve.